Good evening, everybody, and welcome to this latest edition of IndyTalks presented by the Nevada Independent. I'm John Ralston. I'm the editor of the Nevada Independent. If you're supporters of our nonprofit enterprise and watching this on our live stream, we thank you. If you're not, we are disconnecting you from this Zoom. I'm kidding. If you like what you see here tonight, though, and you like what we're doing, there is a donate button on our website. We survive on donations. We would appreciate a small monthly recurring donation from anyone. This is another important topic that we're covering, the taxation of mining, which is coming before the legislature very shortly. Before we get started, I first want to thank our two sponsors for the evening. The Vegas Chamber and the Reno Sparks Chamber of Commerce were kind enough to sponsor this event. We appreciate their support of the Indy and of IndyTalks, which we hope to do at least 6 this year. We've already done one before. So let me get now right to the introduction of the panel. Laura Martin is the Executive Director of PLAN. That's the Progressive Leadership Alliance in Nevada, which has long advocated that mining should pay more in this state. Laura's been in Nevada for almost 15 years now, I think, and she started with SEIU before climbing the rungs of PLAN to become the Executive Director. You will find few more passionate advocates for causes than Laura Martin, and we appreciate her being here tonight. Jim Wadhams has been a legislative lobbyist, I can't believe I'm saying this, for about 40 years. He became a lobbyist after being Nevada's insurance commissioner in the late 1970s. Among his clients have been insurance companies, banks, and yes, the reason we have him here tonight, the mining industry. You're going to find few more respected lobbyists up in Carson City than Jim Wadhams, and we appreciate him being here as well. Lorne Malkowicz was a Carson City institution until he retired as director of the Legislative Council Bureau about 10 years ago now. He later lobbied for R&R Partners before retiring, and we appreciate the ever respected by many and all Lorne Malkowicz taking a break from his retirement to be here tonight. Also here, of course, is Daniel Rothberg. He's the Indy's environmental reporter. No one has ever covered those issues the way that Daniel has, and I'm going to turn it over to Daniel, who's going to not just lead this discussion, but first start us off with a little background for those of you not that familiar with the issue. Daniel, over to you.
Thanks, John. In August, the legislators passed 3 resolutions in a special session that would increase how much the mining industry pays in taxes. Although lawmakers have not taken up the resolutions in this session, they are expected to weigh the proposals in the coming weeks. To amend the Constitution, the legislature must approve one or more of the resolutions again. Then they would go to a vote in the 2022 general election. All 3 resolutions are similar in that they kickstart the process of amending the Constitution, which caps the mining tax at 5% of net proceeds. The resolutions, 2 of the resolutions, remove a 5% cap on the net proceeds of minerals tax and replace it with a 7.75% tax rate on gross proceeds. That, according to some estimates, would raise about $541 million in revenue. The 2 resolutions differ in where portions of that revenue would go. While some portions would go back to the general fund, one resolution proposes passing along those revenues as a dividend to Nevada residents, similar to a program in Alaska. The other resolution would funnel a portion of that revenue toward education and healthcare. The third measure that lawmakers passed over the summer was characterized as an olive branch to the mining industry, a sort of compromise that raises the net proceeds tax cap to a maximum of 12%, but keeps the tax as a tax on net proceeds rather than gross proceeds, and that is estimated to generate less revenue, about 170 million. And I believe a portion of that revenue would go to the general fund and a portion would go to county governments. And I will turn it back to John. Hopefully I haven't bored anyone with all those kind of nitty gritty details of the resolutions, but I'll turn it back to John to ask the first question.
And of course, there's a lot of history here, and that's one of the reasons we have Lauren here, and he'll jump in once in a while to talk about some of that history. But first, I want to start with Mr. Wadhams, who I enjoyed his face when you said olive branch. I don't think he considered it such an olive branch, but let's just get right to the heart of the question here, and that is that what is the argument for the mining industry, which has been protected in the Constitution since 1864, was essentially last hit for a real tax on itself more than 30 years ago, and whose major companies are doing pretty well. What's the argument, Mr. Wadhams, for why they should not pay more? I think you're muted, which you've never been.
I'm surprised my voice didn't carry through the muting, but thank you for that kind introduction, by the way. But let me get to the answer to your question. This is an interesting cycle that comes up periodically. Let's just tax mining more. And generally, it's in absence of any large policy question about how do we approach taxation in Nevada. And so mining has to start from the position, generally speaking, of why are you starting with us? Why aren't we starting with something broad-based that will actually stabilize the economy going forward? As Governor Sisolak has said several times in the last few weeks, we can't do this again. And so that raises the question of why are we taxing mining, just as you said, John? And, because they have money? What's the policy? Is that profitability? Is that revenues? Where's the larger discussion? So hopefully through the process of this legislative session, that opportunity will occur. I think it's particularly appropriate that mining be part of that discussion, but to be the only topic of the discussion seems to be very untoward. I don't understand it.
So let me, Daniel, before you jump in, let me just follow up real quickly, and I'm sure Laura has some strong opinions on this, but I guess what I ask, this is the same thing the gaming industry says whenever a gaming industry, a gaming tax is proposed. Oh, let's just tax everybody. As long as it's broad-based, maybe we'll come to the table. But mining is different than any other industry, as I pointed out, in that it has this unique protection in the Constitution. It has these deductions in statute. The gamers, I've always said, are jealous of the miners because of all those protections and deductions that you have. And saying that you'll be part of the discussion, it's going to be broad-based. Listen, I haven't quite been around for 40 years, but pretty close up there. And I've heard all of these so-called defenses before. The issue is why shouldn't the way mining has been taxed be changed, right?
Well, that's clearly the question that's before the legislature and the question that you raise. And I guess my counterpoint to that is you start with certain assumptions that frankly are not true. You say that mining has been protected. I don't believe that's correct. And we have a true constitutional scholar who can correct me if I'm wrong. But when the framers put in 1864, put the Constitution together, they specifically included mining to be taxed, specifically included it. And so it was not excluded. If they ran the state, why didn't they just simply exclude themselves? So mining has always been in there. Second point is, many people refer to this 5% cap that's in the Constitution. Amazing. It's in there for everybody. That was put in 1937. It was amended to the Constitution to protect all property owners from being taxed at more than 5%. So the 5% and mining being in the Constitution doesn't suggest that they've been protected at all. They've been fully exposed. The legislature has placed payroll tax on them, commerce tax on them, sales and use tax on them, to suggest property tax generally on them to suggest that they're protected. They don't even have an exemption. Retail does on their inventories. Bankers have on their securities and their accounts. Those are exemptions. So protection is a false premise. You got to start with recognizing what's actually in the Constitution.
I'm going to let Daniel take over now, and I'll try to be quiet for as long as I can.
Well, I want to give Laura an opportunity to respond to that. I mean, what would your sort of policy basis for, plan has been pushing for this mining tax sort of, legislation and constitutional amendment around mining tax for a long time. What is the policy rationale for that? And what do you make of the claim that mining has not been protected in the way that sort of John laid out?
Well, they have been protected, and they've seen to it that they will continue to be protected. I think the policy rationale is recognizing the imbalance of power between people and corporations that operate in the state. And I think the number one offender is the hard rock mining industry. I mean, we can argue about what is a fair share, should they pay more, but I think we can all agree they can start by paying what they owe. The mining industry does pay some taxes that other businesses pay, but that doesn't equal actual dollars when they're allowed to take numerous deductions that other businesses, especially small businesses who could really use it now, are not able to take. And so there are no caps on marijuana taxes. There are no caps on tobacco, two industries that pay more in taxes than the mining industry. There are no caps on how much you can cut from education or cut from healthcare. And when we allow that kind of policy debate where we have to protect mining at all costs, we have to protect mining's profits at all costs, even if that means we cut victory funding for schools or we have no strong healthcare network in the rural counties. That is the choice that the mining industry forces every Nevadan to make every legislative session. And the policy discussion is how Nevadans are no longer going to stand up for that. The mining industry, as you mentioned, will argue that, when you put together it's not just this net proceeds of minerals tax, they also pay property tax and modified business tax and these other taxes. And when you put that together, it looks a lot more like what the gaming industry might pay or what other sort of big corporations might pay in total. Why is that not, from your perspective, why is that not the case? What about that argument do you disagree with? Does the gaming industry get to deduct the cost of travel within Nevada from their taxes so they can pay less? I mean, the mining industry does. If anything, the gaming industry should be standing with us and pointing out that these deductions are not equitable across all businesses. So why is the mining industry allowed to single itself out and take these really generous deductions? And I want people to know who's watching this, it's not just about what the mining industry doesn't pay by, eating up all these deductions. We have to compensate for that. So when we're losing out on revenue that is owed to the state, we have to make up for it in other ways. And like we saw this summer, and I hope we don't see this session, we make up for it by hurting public education and healthcare and other public social services.
It looked like you wanted to say something, Jim.
Yeah, I think there's some important points that are being brought up that that really need to be evaluated. Gaming pays property tax. They pay sales tax on the equipment they buy. What they pay that's unique across all industries is they pay a transactional tax on the gambling win, not on the gambling handle, not on the revenue, but on the gambling win. So that's a net tax. And I'm not suggesting that change. That was a deal that was made when we legalized gambling in 1931. Fair deal. No other industries pays a gaming tax except gaming, right? And no other industry pays an alcohol tax except alcohol purveyors. No one pays a cannabis tax except cannabis industry. So to identify particular transactional type taxes and suggest that an industry that doesn't sell alcohol, doesn't sell cannabis, and doesn't have gambling enterprise should pay those taxes just simply doesn't make sense. When you compare the taxes that are paid by industries, you need to compare them all. In fact, you could look at, for example, the total taxes paid as a percentage of employees. The two highest in the state by far are gaming and mining. So where is the discrepancy that somehow mining is escaping? The other point that was raised is deductions. All of that suggests and existence of an income tax. Nevada has no income tax in the state. We could have a business income tax, but we don't. So if we want to start talking about profits and taxation on profits, we should talk about adopting a business income tax. The tax on minerals is a property tax. The state Supreme Court has determined that many times over the course of the last 50 to 100 years. It is a property tax. It's not an income tax. So, like many other property taxes, the valuation of property is based upon deductions for operating costs and the like. Appraisers do that every day when they evaluate property. So this is not unusual. It is not unique and is not something that should be set aside. It is simple appraisal methods.
I think that raises a separate point, though, that the mining tax is in fact in lieu of property tax, that the mining tax is, instead of, as the Constitution provides, that you have a uniform and equal rate of assessment and taxation except for mines and mining claims, their property taxes assessed based on net proceeds. John said I would be the historian, so we talked mainly about the last amendment in 1989. Jim used the word deal, and there was a deal. The idea was Senate Joint Resolution was going to uncouple the tax on mining from the property tax rate in the state. At that time, the numbers that were being used to compare the 5% that the most profitable mines would pay was being compared to a general 2% rate across the state. Now that rate's probably closer to 3.5% or 3 to 3.5%, depending on where you are. So the premium that mining is paying isn't as large as it was, but it was a deal. As John indicated, Bob Miller recently ascended to the role to governorship, proposed $50 million additional dollars in his budget, contingent upon passing Senate Joint Resolution 22 again, and Senate Bill 61, a bill that would provide the scale very similar to what we have now. I don't even know if that scale has changed of net to gross of what the mines would pay. But what mining got in return, and I think it's a little difficult to say there's no protection when they have a provision that says that no other tax may be imposed upon a mineral or its proceeds until the identity of the proceeds as such is lost. There is some protection for that. The extent of that has never been tested. What we testified to in the 89 session was that this would allow business taxes, as we talked, general business taxes, but not necessarily specific taxes other than the net proceeds tax. Mining does pay the commerce tax, but there is an exemption in the commerce tax for the gross yield. So if you pay the net proceeds tax, you subtract the gross yield from the amount you pay for that. Mining does pay at the higher rate of the MBT. Daniel, you mentioned the MBT. Most people pay 1.475%. Mining and banking pay the 2%. So mining and banking pay at a higher rate for that. I think that's the end of the history lesson.
Well, I actually would like to ask one other question, Lauren, which is just to give people a general sense. When do you typically see these proposals to change how mining is taxed? In what types of sessions do you typically see this come up?
When we're out of money, that's simple. I mean, Governor Miller, in his first term as governor, before he was twice elected, was looking for more money. He had several programs he wanted to enact. One of the things that was done in addition to increasing it was to accelerate the payment of the net proceeds tax. To move that forward a year, that continued for a couple of years. 2009 comes around, and we are in a situation very similar to what we were in this past year, where we had huge economic problems. Between 2009 and about 2016, mining again prepaid the net proceeds tax, and that was when there was a big discussion. 2011 and 2013 proposed constitutional amendment that failed in 2014, and now with the economy hurting again, the idea of turning to another revenue source comes up. Prepayment is particularly a good idea in a time like this when you have reason to believe that the economy will bounce back in a couple of years. So prepaying the net proceeds taxes was a easy decision, I think, for the legislature and mining during the special sessions this summer.
If I don't mind, if you don't mind, Daniel, I'd just like to add to that. One of the interesting pieces that Lauren mentioned is that this does come up about every time we are in a down cycle in the economy, because there tends to be a movement of money into precious metals, gold, silver, et cetera. And then the values, because of that demand change, the values go up. But as mining is known, it's a boom bust industry, and it's not because the mineral exists or not, it's because the economics of it change. And we look at this last cycle we've just had with the pandemic. Frankly, if the reason to tax mining is because it's doing well right now, then the question I would ask is, why aren't we taxing everybody who's doing well right now? And I'm not promoting a tax on anybody, but seems to me Amazon's doing quite well. They seem to drop off packages at my house from time to time. FedEx, UPS, anything in logistics has been doing well in this pandemic. And so if the principle that we're talking about is those that can should pay more, why aren't we looking at all of those that can? Why don't we have a broad analysis of how the economy is actually functioning, instead of just saying, oh, well, it's a down economy, let's go tax mining again? There's no principle or policy behind that.
We talk about taxing mining every year, not just when we're in a down year. I think it's something that has needed to be fixed, since the signing of our Constitution. And I do want to keep impressing on this point. We can have like a long answer and talk about different businesses and different taxes, but the point is, it doesn't equal real dollars. In 2019, the mining industry helped itself to $5 billion in deductions. If there's any small businesses listening, even small businesses that it's tied to the mining industry, you get to deduct the cost of transportation, the cost of processing and your sales, cost of delivery, cost of maintenance, depreciation of capital, industrial insurance, and healthcare. We are paying for their healthcare, unemployment, cost of travel in Nevada, cost of corporate services, cost of development necessary for the mine, cleanup cost, royalties paid if on a lease. So I know a lot of my friends from, John's favorite group, DSA, is listening. I want to repeat that. We are paying for their healthcare. We are giving them paid healthcare. So any businesses who think that, if it's mining, it'll be all of us. No, we're really looking at just mining, because I don't think any other business gets to enjoy so many deductions that you basically save $5 billion in those deductions from the taxes that you owe this state.
Well, Jim, I'll give you an opportunity to respond to that in a second, but I want to ask, because two of the resolutions specifically look from switching to net proceeds to gross proceeds, which would eliminate some of those deductions that Laura is talking about, correct? Oh, I think you're on mute.
Those two proposals, SJR1 and AJR1, would do exactly that. And I think the problem, whether there's two issues, and maybe I'll wait until you come back to me to answer the point that Laura was making. But in terms of those resolutions, they move the tax to a much higher level and at a much higher burden. Frankly, that appears by my calculation to be about a 400% tax increase. And so we talk about fairness and paying the fair share. I'm not sure, I know no person wants to have a 400% tax increase. And I'm pretty sure that businesses couldn't sustain themselves with a 400% tax increase, which really raises the bigger point that was completely lost in the special sessions because there was no access to the process. Where was the opportunity for anybody, especially the legislative fiscal staff, to do a regression analysis to see what kind of impact that would have on the industry? They simply took the 2019 numbers and extrapolated as if a business could just keep operating without any impact from a 400% tax increase. A tax increase at that level is likely to generate less dollars, not more.
Why is that? because of the impact on business, or
it changes the economics of this business is like all businesses is based upon economics. Right now, we're seeing that with the pandemic. If the revenue doesn't come in, the businesses have to either lay people off or shut down. And the same with mining. You put a heavy tax on the total revenues, it makes it will impact the economics of continuing to do that, and the production will decrease. This is not just money for nothing and the gold is free. It has to be extracted from the ground. We have to hire people to dig it. We have to hire people to refine it. There are expenses to do it. And the investment to do that, if you tax it at a level where it's not economic, the investment goes away.
Wait a second, Daniel. Did Jim Wadhams just make a Dire Straits reference? Because if so, I think he ought to do a mic drop and just leave at this point. But let me ask, Daniel, let me just jump in here for a second, because I want Lauren maybe to speaking of history. Can you talk a little about these deductions, Lauren, and how they got into statute and why they exist and why the mining industry? Laura keeps saying that the mining industry has these deductions that no other industry has, and there are many of them. What was the rationale for getting those into statute in the first place?
Well, John, I think as far as I know, although the Constitution originally just referred to proceeds, as far as I know, mining has always been taxed based on net proceeds, gross yield minus deductions specified by statute. It is a unique form of taxation. It is in lieu of property tax. We don't say that this piece of property is worth $100,000 and we're going to impose this rate on it. We say we're going to determine what your net proceeds are, and that is going to be deemed the property value for the purposes of assessment and taxation this year. Up until '89, if your county rate was 2%, you pay 2% on the net proceeds. There has been over the years changes. I've listened to some of the things Laura was mentioning. Some of those have changed. I think it was about 2011. There's a fairly substantial dive into the net proceeds, but it is something that has been addressed over time. One question that came up, I know, in 1989, when there was a proposal to reduce the deduction substantially, was whether this would be constitutional. The Constitution now, although it originally said proceeds, now says net proceeds, tax upon the net proceeds of minerals. And the way the property tax works now is you are assessed at 5%. The county rate is returned to the county, and AJR2 would continue that same practice, and the remainder goes to the state. The deductions have been and can be adjusted from time to time. But if you go too far in reducing the deductions, then you aren't taxing net proceeds, you are taxing something closer to gross. And there was another point I was going to make, but they go away.
I've been there. Go ahead, Daniel. I'm sorry.
Oh, no. That's really interesting. I think it gets to, I think from a broader perspective, even explaining this to friends or, people, this is quite the process to change how to change an industry tax, to change any kind of tax policy, an amendment to the Constitution. I guess I would just ask, do you think that this should be in the Constitution or not to begin with?
If I could, before we dive into that, Daniel, my delayed reaction brain remembered the other point I was going to raise, which is the gross ratio. When we went to the 5% and put in the provisions in SB 61, there is a sliding scale of how much someone pays. Not everyone pays 5%. It depends upon their ratio of net proceeds to gross proceeds. If it's above 50%, 50% or above, you pay 5%. Another change added in 1989, it was determined that although Governor Miller had assumed that all the large mines would pay because they all had, that he assumed they would have ratios this high, it turned out that some of the larger mines did not have that high net to gross ratios, and then a floor was put in. If you have more than $4 million in net proceeds in a year, you pay at the 5% rate.
Okay.
The change from net to gross obviously would have a much bigger impact on an entity that's got a net to gross ratio of 10 or 20% versus one that's got a ratio of 50, 60, or 70%.
So, and I'll get back to my question at some point, I'm sure. But just to clarify with you, Lauren, what you're saying is that different producers, depending on their ratio of net to gross, pay a different rate?
That's correct. And again, that gap has shrunk over time. It used to be the difference between about 2% and 5%, and now it's more like 3 to 5 or 3.5 to 5. But in reference to Jim's mentioning of profitability, if you have a mine or an operation, I mean, different operations have different levels of profitability. If you are running a small mine with a small margin, and again, net proceeds is not profit. There are a lot of deductions, but there are also a lot of expenses that are not included and not allowed as deductions. So profit is a lower number than net proceeds. And that is if you are saying taxing on net proceeds, you are still taxing on something that is, akin to profits. When you switch to gross, if you have a operation that has a very low net to gross ratio, they are obviously going to be affected, and it's going to affect their operation.
Yeah.
I don't want to eat up all the time, but I do think it's kind of interesting to hear the discussion on taxation and how you approach taxation. I've heard it say that there are deductions. Well, first of all of us that pay federal income tax, small to large, take either a standard deduction or itemized deduction. So deductions are not unfamiliar to anybody in business. Secondly, when we talk about real estate, there are methods of appraisal. And by that, I mean, that's how do you value the real estate? And for example, commercial property, shopping centers, offices, they take the aggregate revenues that are paid in rents and they deduct the capital costs and the maintenance costs for that facility, and then they capitalize that to get a value. That doesn't make it an income tax. That doesn't make those deductions in any way bogus or harmful, because what you're ultimately trying to do with value is to find out what a willing buyer would pay a willing seller. And so we come back to the gold. If you have a nugget of gold, let's just use my example of $1,500, that nugget's worth $1,500, it's an ounce. And it's laying in your backyard. You go pick it up. What's it worth to you? $1,500. If you find out you've got to spend $1,000 to dig a half a mile underground to get it out, how much is it worth to you then? $500, because you got to spend $1,000 to get it out. That's why the net proceeds concept came about, because when they had the debates in the Constitutional Convention, they said you can't evaluate this the same way as anything else because it's worth nothing until you get it out of the ground. It's a severance tax.
Laura, I think we're going to maybe move on to a couple other topics related to this, because I think there's a whole kind of political implication here and a whole kind of looking at the impacts of the resolutions on, revenue and where that revenue goes. But I do want to ask Laura, is mining different than for the reasons that Jim just laid out about, the investment that goes into extracting some of these minerals? What do you make of that argument? And that argument's made a lot by the industry.
Yeah, definitely the same old argument. But I do want to point out, beginning of the fiscal year of 2020, the mining industry's modified business tax did decrease. And I also do not think it's fair to compare a federal tax deduction, my $20 a month donation to my alumni association compared to $5 billion in deductions. There are some mining companies that have taken so many deductions, they didn't pay the net proceeds tax. 13 gold and silver operations in Nevada didn't pay a net proceeds tax because they took so many deductions. And so I really had to get that out, and I forgot your question. So if you want to ask it again, I will directly answer your question.
Well, Jim was talking about the investment that goes into mining and why there's this deduction, why there are these deductions and why they're taxed on net on the basis of net proceeds. And I'm wondering if you find merit in the argument that mining is in fact different because of what it takes to actually mine these minerals.
Yeah, well, the mining industry can't have it both ways. They can't say we want to be singled out and then say we're special. So we need to take into consideration the effort it takes to bring our, product to market. It's difficult to grow marijuana and, bring something to market. There's a lot of different industries that have expenses, that have costs in order to bring their product to market and be profitable. A lot of those businesses and industries don't get to deduct the cost of travel within the state. I can think of a lot of food pantries in Nevada that have been traveling all over. I bet they would love to deduct the cost of travel, or any business would deduct the cost of healthcare, but not everybody has that privilege like the mining industry does.
Well, unless John wants to jump in here, I
can jump in, Daniel.
Okay.
I just, we've been doing this for a little bit more than half an hour, and just, maybe some people's eyes are glazing over. Jim is presenting all his arguments. Lauren's giving a history lesson, and Laura's saying, what we've heard before. We haven't heard anything really new. So let's try to really focus on this, Daniel, if we can. I mean, even the Lauren Malkowicz, who I know you would never disagree with, Jim Wadhams, has mentioned that mining, despite what you said, has been protected. And I've heard the argument from you going as far back as 1987 when we first met, that mining's not really protected because they have the 5%. They wrote the Constitution, they put the cap in there for a reason. You and I both know that. So the question is, are you actually saying that if one of these resolutions were to pass and there was a 400% increase in taxes, and I love the gaming industry and the mining industry both use this technique because their the rates are so low that whenever they're increased, of course, it's going to be a huge percentage. Are you saying that mining will go out of business? I mean, the gold and silver, they're here, Jim. You can't go anywhere.
I'm glad you raised that question, because that's one of the greatest red herrings that has been brought up every time we talk about mining.
Daniel, do you realize I've been accused by Mr. Wadhams and I've been presenting a false premise and red herrings? I hope we're recording this. Go on.
That's all in the same program too.
Yes, exactly.
The problem is that this is a business based upon economics like any other. And so where is mining? Where was their opportunity to have their economists or accountants put on information to the legislature that would show the legislators what would a 400% tax increase do to the productivity of those mines? And that analysis is absent. Nobody has mentioned that. Frankly, most people don't want to know that, because their agenda may be, let's just get them to stop mining. And so I come back to my simple example that I gave Daniel about the nugget in his backyard. If he finds out it's going to cost him $1,500 to dig it out, he's not going to bother. And that's the point. That's why if you don't dig it out, it has no value. And if you do, you're not going to do it for long at less than that. So if the taxes change the economics, like any other business, it will change the activity. And the fact that the gold's here, shoot, it's always been here, John. Why it comes and goes is based upon the commodity price of gold, the depth it is, the disbursement it has in the earth, and it's the cost to bring it out. And if we make it too expensive here, there's places all over the world, Australia, Peru, all over the world. The investors will go other places. And then when Nevada comes back to its senses, then they'll come back here.
Daniel, can you just permit me just to do a follow-up here, and then I want to ask Laura a question. You didn't answer my basic question, though, which is that I'm sure these companies have done economic analysis. I'm sure you're aware of them. Are you saying that mining companies will go out of business if these resolutions go to the ballot and are passed?
Well, I could say yes, because I would be right, and I could say no, and I would be right, because it depends on the particular extractive operation. All right. And third, the mining company is different than the extractive operation. So with that kind of a tax increase out of the, and I'm not a mining association representative, let's say they have 70 mine pits extracting in the state, there could be 15 or 20 of them that would close down right away because they're so marginal. There could be 15 or 20 that might stay productive, but it would change the economic of that production. And third, the mining companies, they're not going to go out of business. Their investors are just going to move their operations to another place. I was absolutely amazed as a young person, even younger than you, John, when I saw a molybdenum mine in Tonopah. They invested $25 million, which at the time in ancient Nevada was a lot of money. The price of molybdenum changed. The mine just walked away from all that equipment, just walked away. So any theory that it won't have an impact on a business is not based in reality. People just aren't thinking you raise taxes that will have an impact on business.
Daniel, let me just ask Laura one question, then I promise I'll turn it back over to you So Laura, there's two things that Jim brought up that I want to ask you about. One is, of course, is that they think, or they say, that the agenda of folks in plan really is not just to tax mining, but to get mining to stop mining. And I want you to address that. And then I want you to address the economic argument, which has always been put forth by mining, that you should not do this when you're putting too many eggs in a basket where a commodity fluctuates in price. You might get a lot of money out of them when gold is high, but gold can go down, and then you have a real problem. What about those two arguments? And then I'll let Daniel take over again.
Yeah, I mean, I just go back to what I said earlier. I just feel like there's no other industry or business who gets the privilege of protecting their assets so they can continue to make $9 billion in profits or collect $5 billion in deductions. I know for us, the three resolutions came out of nowhere. No one asked us anything, but we didn't, sit back and complain about it. We jumped into action and tried to figure out what these really meant. And so, Mr. Wadham said, where was mining? Yeah, where were you this special session to try to make these resolutions the best that they could possibly be? Like, come to the table. We were testifying on this bill until 4 a.m. So if we can activate people from all over the state that quickly, surely you all are prepared to address any resolution that comes forward addressing your taxes. You said yourself that every other economic downturn that people look to tax the mining industry. So you should have been prepared to come to the table and expect that to happen. We know that there's always, this extreme thing that, we want to destroy rural Nevada, that, Mr. Wadhams called State Senator Sheila Leslie an eco-terrorist for wanting to tax the mining industry in 2013. But really, we want to look at the imbalance of power between corporations and people. It goes beyond taxes and is also addressing just the power that the mining industry has. We too often have conversations with legislators who say, I don't want to cross mining, or, I'm a freshman, I don't want to get on their bad side, or people who are just afraid to make any public comments, people who live near active mines. We get messages from them all the time saying, how can I contact my legislator without the mining industry finding out because my uncle works there? And so it's not about, hard rock mining doesn't exist. I mean, ideally, these international mining corporations wouldn't be colonizing sovereign tribal land, but it's here, it's happening. And because it's here, and because it's happening, and because of their deductions, and because of the place of privilege they hold in our state, it's our public education that suffers because we don't have the revenue to take care of our kids the way they deserve it. And one example I want to leave you with before the next question is, there are really bad cuts made to education. Every downturn, there are tough choices that have to be made. One of those cuts was to victory schools. There's someone we know in the Reno area whose position was funded by Victory, and it got cut. I mean, thankfully that school found another position for them, but if, because of the economic downturn, their position would have been cut, and this underserved majority POC school would have gone without a health teacher during a pandemic. And the cruel irony is, During the school from home process, all the mining industry had to offer, didn't offer to come to the table to find new revenue, didn't offer to come to the table to find other ways to keep Zoom funding. They gave them a bottle of sanitizer. And so it's pretty much the example of why we come to this decision with these policies, is mining takes so much from us and doesn't pay what it owes. And then we're left with kind of like shallow gestures of charity. We know that the mining industry is lucrative. We know that it's expensive, to be a miner, but it doesn't take away from the fact there are profits and how much they take in deductions. They can still be profitable without taking so many deductions, especially all of these deductions that no other business in Nevada is able to take.
So I'm going to let you respond to that. But I just want to ask a quick question, and you can respond to that, Jim. But, if you look at the breakdown of the net proceeds, it is true that about, I think 90% of that tax comes from gold and silver in particular. And then of that, most of the production comes from a couple of top companies, Kinross, Barrick, and Newmont. Barrick and Newmont are now largely operating as a joint venture, Nevada Gold Mines. Given the concentration in the industry, does Laura have a point that mining has a lot, that mining's power is concentrated in a couple of companies, and that those companies are not necessarily at risk of going out of business in the way that you described, and maybe given the sort of the joint venture structure in the case of Barrick and Newmont, there are cost savings there and things like that. Can those companies afford to pay a little bit more without going out of business? Does Laura have a point there?
Well, let me make this clear. I tried to answer this when John asked the question. The mining companies will not go out of business. Will the mining activity in Nevada diminish if the costs exceed the opportunity? And the answer to that is yes. The mining companies won't go out of business. They will go extract their minerals in Australia or Peru or someplace else. I think the problem is we focus on these deductions, and I've tried to explain through my simple example of that nugget in your backyard. These aren't really deductions. These are costs. These are costs to get the mineral out of the ground. If you don't get it out of the ground, it stays in the ground. All right. It's just that simple. It's not some giveaway. And for people to do that, it takes people to dig it out. And it takes big machines, and a lot of money is spent, a lot of capital investment is spent to do that. I think part of the confusion is we hear about deductions, and yet what I think the legislature should be focusing on is abatements. We have abatements that exceed $2 billion a year that the state has granted. And so I would be hopeful that those that want to help fix the tax system might want to look at that entire area of abatements instead of saying, we've got an industry, we have a sector of industries right now which hasn't protected us from the pandemic, from the hit of the pandemic. And instead of looking to diversify, as the governor has recommended, we want to cannibalize one of them. And the final point, we have a new administration in Washington. President Joe Biden just issued an executive order in February of 2021 that said we have to protect and enhance the mining chain of making minerals that create such things as this video production, cell phones, everything. President Biden has put a critical minerals policy in place that mining has to be protected and enhanced. And yet here we are, we're cannibalizing them. It simply doesn't make sense with this new administration.
I just want to clarify, when you're talking about tax abatements, you're talking about tax incentives that the government gives to companies like Tesla, and is that correct?
Broader than that, but yes, generally that would fall into the category, but much broader than that.
Well, I want to bring Lauren back into this, and if you have anything you want to add to what we've been talking about, you're welcome to. I think one of the issues here that is kind of interesting is, where the revenue will go. All three currently, and correct me if I'm wrong, I think about half of the revenue from the net proceeds tax goes to county governments or goes back to counties. Some of these resolutions would change that. One proposes a dividend. Another one proposes a portion going back to the counties. Another proposes a portion going to health and education. I'm wondering just how you've seen the discussion around revenue and where the mining tax goes. How have you seen that evolve, and what do you make of those three proposals and the impacts that they would have?
In general, again, we've mentioned many times that this is basically a property tax, and local governments, the net proceeds is on the county tax rolls. This is considered a part of the county taxation. Hasn't always been as clear as it is now. Now we have provisions that say the amount that would be imposed in the county, the state pays to them, and the state gets the rest. AJR 2 continues that. All AJR 2 does is it actually puts that specifically in the Constitution. Right now it's in statute. It puts into the Constitution that the amount that the local governments assess would be paid to the local governments, and otherwise the only change is 5 to 12. The two, AJR 1 and SJR 1, eliminate the provisions about returning the county tax rate. I don't know what sort of implementing legislation there would be if these are enacted at the 2022 election. They would take effect January of 23, and we would need to have some statutes in effect. Just a little bit of history. Again, in 1989, we spent a good portion of the session dealing with the fact that SJR 22 injected some ambiguity into the law by changing from taxation of net proceeds of mines to net proceeds of minerals, and the prohibition against taxing the minerals or the proceeds until the proceeds lose their identity as such. There were questions as to the scope of the law. Similar questions can arise with regard to constitutional amendments. I think AGR 2 raises the fewest. AGR 1 and SGR 1, I think the legislature will want to do the same thing that they did in 1989, which is if they choose to move forward with one of those, have implementing legislation that indicates exactly how it be carried out. AGR 1 and SGR 1 are both self-executing to the extent that they impose the 7.75, I believe, % gross tax, set that as a floor, allowing the legislature not only to tax higher, but to also impose other taxes. AGR 2 retains the existing structure, which is the only tax on a mineral is the tax on the net proceeds, just changes the rate up to a maximum of 12 and leaves them the hold harmless for the counties.
Jim, you wanted to chime in?
I apologize. No, we left something, and it was about the special session. I think that was a very interesting opportunity, but one of your people from Indy did a great interview, great article with Tyree Gray, the president of the Mining Association, about what happened at the special session. And the opportunity to be at the table was not afforded to him. And I think that's part of the problem. That's the point. If the viewers pick up anything, I would hope it is that when the legislature considers tax policy, they've got to consider the ramifications of what they're going to do. We've seen a lot of conversation in the last week or so about the two teachers' taxes initiatives, because there's been discussion about the impact that might have, that might be more harmful than it is helpful. It is that kind of analysis that should happen, that didn't happen in the special sessions. And when Laura, and frankly, I was up until 4 o'clock in the morning as well, and I commend her for doing that because it took some coffee. But the point is, those are 2-minute opportunities. Those aren't opportunities to have a discussion like we're having with the 5 of us tonight. And I would hope that the legislature would do that. They would invite mining and any other business to explain what the impact of any tax would be, so that the public can see that, so we don't live in this world of sound bites and myths.
So, I want to kind of get back to the impacts, but maybe in a different way, which is, rural Nevada, I mean, I guess I'm curious, from your perspective, Laura, a lot of rural counties have raised issues, particularly Eureka County, Lander County, Humboldt County, the counties that are, have revenue that are tied to the current system of the net proceeds of minerals tax. And they have raised concerns about the resolutions, I think, all in general. I'm wondering from Plan's perspective, what do you say to a rural county that has concerns about the impacts that changing the tax policy might have on them?
Yeah, I mean, the concerns are definitely valid. And this, when the 3 resolutions came out, we didn't ask for an invitation. We didn't wait for an invitation. Excuse me. We didn't wait for an invitation to be part of the conversation. And I think that's an opportunity for the mining industry to come in and make the policy as best as it can be. It says, I'm losing my voice now. It says something that, this is a mining industry that's spent a considerable amount of time on social media, saying they represent the rural counties, what the rural counties, stand to lose, while at the same time not doing anything to fix any of these resolutions or find any other solutions. Their solution, as Mr. Wadhams just said, is to basically, take my mine and go back home to Canada, instead of really, the table's here. The table's been set since the summer. We've had these conversations, and the solution is always not us. And it's just not realistic. And so these counties, we have planistas in those counties too. People who work on the mines, people who are part of the tribes up there. And we know that it's important for rural parts of the state to be protected as well. And so we've been trying to make these resolutions as best as they can be. AGR2 could be a solution if the mining industry can step up and make a trailer bill so that it actually does raise their taxes and not just raise the limit at which their taxes can be raised. And so again, this summer, we never waited for anyone to invite us to any conversation. We knew it was happening. So, the saying goes, if you're not on the agenda, you're on the menu. We wanted to be at the table. And so we fought our way in to do that. Plan does not, I wish we did, but we do not have the kind of power that people ask our permission before policy. We have to get in there and fight. And I think the mining industry has to step up and just make things happen.
Jim, you wanted to respond to that?
Laura makes some excellent points, and I'm not going to disagree other than to say, I think the article in the Indy, and I'm not selling back copies of the Indy for you, John, but I think that article was well done, and Mr. Gray spoke very clearly about mining's participation and surprise at that process. So to suggest that they weren't participating is unfair. They have, in my tenure, they have always participated in discussions, both about them and about taxation broadly. And I understand, although I'm not here speaking for mining, just from the historical perspective, they are having conversations because the impact of the state is much greater than let's get them because they got money. The impact of the state is long lasting, and I think undermines what the governor's trying to do, and that is to bring more diversification to the economy so that we are not so heavily dependent upon tourism, gaming, and hospitality. That has almost killed us 3 times in the last 20 years.
Daniel, let me jump in here
Yeah.
for just a second, because I think we're spending too much time on process here. Both Jim and Laura want to talk about the special session process and who participated and who didn't. The special session process was a joke. It was a travesty. It should not have happened the way that it did. There was no real debate over anything. Things were just jammed through. Okay, we are where we are, the recriminations, etc. But I want to bring Lauren in because what I remember, and this is why I've seen this movie before is coming, and not just because I've heard all of Jim Wadhams's arguments for 30 plus years, is that there was all this sturm and drang for however long that session was, and it wasn't just 120 days in those days, to extract $52 million, as I recall. This was what Miller proposed, and he said, you know, mining ran a campaign back then too. There wasn't social media then, Laura, but they ran a campaign back then too. Mining, it works for Nevada, and as I remember what Bob Miller said in his State of the State, it's not working hard enough, I think was what he tried. And he worked the entire session to get $52 million. And so, do I have that right, Lauren? Is that what happened?
I think the number was 51 or 52 million over 2 years over the biennium.
And so this is history repeating itself, because it seems to me that whether mining's going to be at the table, you know, plans are going to be yelling at legislators to finally do their jobs and tax mining, and legislators will say what Laura says, you know, I don't want to get on the wrong side of mining, etc. Even though I think their power is overrated when you look at how much they actually give to campaigns, when they're not giving $500,000 to the governor's PAC, which isn't really his PAC, he says. But seriously, I mean, it takes a lot, right, Lauren, for them to actually get any money out of mining because of the way that the Constitution is written and the way those deductions as they exist are.
Well,
that was my best imitation of a William F. Buckley question ever.
yeah, I don't want to go too much into right or wrong or hard.
I don't expect you to. I'm just talking about what it takes to actually get this done.
Strictly rhythm. I don't want to make it cry or sing. Constitution is difficult to amend. That is both a blessing and a curse. It is a blessing because we do not want to make it too easy to amend the Constitution. We don't want a sudden spur of the moment populist movement to result in a change to the Constitution that we regret. The bad thing is it takes a long time, which is why this was done the way it was, to try and speed the process. They said in 1989, you got me doing it, John. 1989, one of the problems was the resolution from 87 could not be amended. It's not just that it takes 2 sessions, is that you have to pass an identical resolution between those 2 sessions and then have a vote of the people. But this is another reason why it is so important to make sure that when you amend the Constitution, you do it properly. If you are going to make a mistake, it is going to be difficult to undo it. It's going to be locked in for a few years. So though we can try and do what we did in '89 with curative legislation and legislative declarations saying that, well, maybe this might have been interpreted this way, but here's what we really meant, you should try to get that policy right. We've talked about the different sides of the equation and the need for discussion. Yes, everybody except Marvin Sedway voted for the deal in 1989. Marvin wanted more. But rather than looking at that as mining getting its way, you could look at it as the legislature and mining coming to a consensus. It is true that if you have too large an increase in taxes, that people are going to lose jobs. That's not made up, that's a fact. It is also true that mining makes a lot of money, and we could pay more, get more in tax revenue from mining without unduly hampering the industry. The question is how to find that balance, and discussion is the way to get there. So while you're poo-pooing discussion, that's where we need to go.
Poo-pooing it, that's what we're having tonight. And Daniel, I'll throw it back to you, but obviously the solution to this is to have Lauren come out of retirement and be the mediator between the 2 parties. I think he could solve this.
Well, I mean, Lauren mentioned that you have to pass identical resolutions. I mean, where do you, and whoever wants to answer first, maybe that's a bad idea. I don't know. I'm not used to moderating panels, but Lauren, Lauren mentioned you have to pass identical resolutions. Where do you see this debate going? You know, the legislature doesn't, we're about a third, I think maybe more than a third of a way into the session, and this really hasn't come up yet. I mean, where do you see this debate going? I guess Laura, I'll go.
I was like, is that Lauren or Laura? So yeah, I mean, Assemblywoman Leslie Cohen is the chair of the Revenue Committee, and we'd love for her to schedule a hearing so we can have a debate. We of course are open to talking more so that this can be the best resolution that we can put forward, because it really is. I think we mentioned before, abatements and other freebies that businesses take, and it hopefully is not a shock to anyone. We're against those too. Tesla, the stadium, and I'm not just saying that because I'm from Colorado and I hate the Raiders, but we do not see our legislature being as inventive as possible for our kids and for our healthcare and the way they've done for big business. I mean, look at this innovation zone. Like, what is that? Why can't we be innovative to make sure that our schools are paid for, so that we have the best schools in the country? We shouldn't have the biggest gold mines and the most underfunded schools in the country. That shouldn't be allowed to happen. And so those are the discussions that we want to have. We are coming at this as if it's inevitable. People are truly fed up. During the pandemic, which is a year now that Governor Sisolak had to make that really hard decision to close non-essential businesses, Nevadans had to dig deep. They turned their garages into food pantries. They gave rides to people. They helped any way that they could. And all we're asking is that the mining industry do the same thing, dig deep and help us come up with a solution. And a solution it can't just be us or we're leaving. The solution is we have to take a look at who is getting, I don't want to say getting away, but who really has these privileges that allows people to pocket money while our public services hurt.
In the beginning, before the session started, Senator Goicoechea said something that caught me in the Elko Daily Free Press. He said that, despite the resolutions, he didn't believe that the cap was going to be changed, but that the mining industry would have to potentially give up something. Jim, do you think that there is room for some sort of compromise here?
Let me make sure that I'm crystal clear. I am not suggesting that mining cannot pay more. I think they can. That's not the issue. The issue is doing it in a rational process so that there is some balance, as opposed to just simply punishment. And unfortunately, we tend to isolate small numbers, which are just a portion of what mining pays. If you look at the array of industry by sector and what they pay in taxes, mining pays hundreds of millions of dollars. They are the second largest property taxpayer behind MGM Grand Resorts. And all of that gets forgotten because we just focus on one small element of what they pay. And I guess that's the point. It's not that mining can't pay more. Those discussions, as I understand it, are continuing to go on with leadership. The point is, I think that policy, the state should be looking at broader policy. Our property tax system is a disgrace. Our property tax system, and largely that's because of what the legislature did in 1979 and 1981, and that was even before John was around and probably before Lauren was around. But we shifted local government off of a property tax base and we adopted a sales tax base. Sales tax is volatile, which brings back a point that was made, I think, Daniel, by you. A commodity price is volatile. We don't want to make the economy more volatile. We want to make it more stable. And I agree with Laura, we need to fund schools, but we need to do it in a way that's stable, not one that's based upon a commodity price. So I think the opportunity in this legislative session is there. Plus, as everybody knows, we appear to be the beneficiary of some federal money. And hopefully that will enhance the opportunity to fulfill the promise of funding education, as well as other services that were cut during the special session. But by no means should anybody feel like they're safe from that. We ought to be looking at making the state as stable for long term as possible. And mining should be part of that conversation. And as I understand it, they are.
Since there's a pause, I'm just going to add, obviously I agree with what he said. Mining needs to be part of the solution. And they should have to step up in a big way, especially for the sake of all of our public services. And I think, I don't remember if it was John or Daniel, but also talking about, our economy. A lot of people in the rural economies are forced to be part of the mining industry, whether they like it or not. And so once the minerals are gone, so is that economy. And so I think another way that the mining industry could step up is helping with diversifying our economy. There's proposals, for electric vehicles. It's going to create a demand, but it's also going to create a need for large scale recycling. So how can we set up, our rural counties, not just for, the next board meeting report, but for the next 7 generations, so they can have an economy where people can continue to get good paying jobs, can continue to send their kids to school, and that we can make sure that we have money to fix the damage that the mining industry does to water, that there's investments in communities for reclamation. I think that not only in paying what they owe in taxes, but also showing that they truly do support the rural counties and making sure that Nevada is innovative and set up to have a diverse economy, especially in the rural parts of our state that really only have the mining industry to supply jobs.
No, I wanted to, oh, sorry, Jim, did you want to? I'm good with it being a discussion, so.
It's unusual, but Laura and I are moving down the same pathway because our future is in renewables and green energy. And all of that is based upon mining. Lithium has to be mined. You can't just make batteries out of thin air. And so we've got to find the right balance to move forward. And we've got to find those parts of our economy that can be enhanced. The effort that some of our people, Chris Brooks and others, the Governor Sisolak to be the renewable capital, fine. Let's continue on that. We've got the opportunity, but it's going to require balance, not punishment.
Well, I want to, Laura brought up, some of these environmental impacts of mining, and it seems to me, and I am going to defer to Lauren because my research in history is definitely not as robust as his, but it seems to me that with this debate around taxes has come in the past a debate about environmental regulation and things like that, and there are a couple of bills around environmental regulation in this session as it relates to mining and other industries. And, I'm curious, Lauren, in the past, have you seen this debate tied to environmental issues and environmental regulation?
Oh, I think it has been, unless I'm mistaken, one of the deductions from gross yield to net proceeds is reclamation costs. So one of the ways to look at, just as tax deductions are often used for policies, the deductions from gross yield to net can also be used to drive policy. I think this was probably a bigger issue in the past. I believe now between federal and state law, there's a lot more reclamation law. And I will allow the other two panelists to correct me on this. I don't believe it's as big an issue now.
Since reclamation has come up, I think there's another excellent point. I hope it's excellent. I'd like to make. In 1989, as I mentioned this, I think Lauren and perhaps John will recall this. There was a huge battle over reclamation, and it had such characters whose names may be lost in history, but I haven't forgotten Charlie George, Ernie Adler, Vivian Freeman. There were two people, one a representative of the mining industry named Mary Beth Donnelly, and the other a representative of Sierra Club named Dr. Glenn Miller. They got together and they created a mining law, a reclamation law, which now appears in Nevada statutes that is being used around the world and in other states as the exemplar of what it should be. There was an interview in a magazine just a couple years ago of Dr. Miller, who said he is proud to take that model across the country as literally the gold standard for reclamation. So when people talk about the destruction of mining, they're talking about mining that occurred back in the Comstock Lode days, not post adoption of 1989 of the reclamation law.
I mean, Laura, do you still, I'll let you respond to that. Do you see, this debate still being tied to some of the environmental issues around mining? Mining still uses a lot of water. Dewatering is a really common practice for most types of hard rock mining. And in addition to the impacts on land and there is robust reclamation, but in this session, there are there I think is a bad actors bill that looks to kind of limit companies that have a bad environmental track record from doing business or mining in the state. And so, I'm curious if you still see some of these issues arising as we proceed through the session.
Yeah, definitely. And I would argue that the people of Yerington, Nevada do not believe, the destruction of mining is something, from the past. I think it's something that people are still living with today. Plan is thankful to have partners like Great Basin Resource Watch and Great Basin Water Network who work with rural counties, and especially Great Basin Resource Watch, to hold the hard rock mining industry accountable to, trying to rush through the process of, tearing apart people's communities. There's an issue now. There's I believe still now there are people camping out at Thacker Pass, kind of right outside of Winnemucca, where that lithium mine is going to be, because people are worried about the destruction that this causes. I don't think it has really been seriously addressed to really analyze what the long-term effects of hard rock mining is on pollution, on animals, on all living things. And so I know, especially from, our experience with the Great Basin Water Network, we were able to go on a water tour, especially going from Las Vegas up to, the Great Basin National Park, and talking to community members. And of course, we were there to talk about the water pipeline, but people were also very concerned about the hard rock mining industry and the amount of power they had to kind of just push through a lot of these processes without ensuring that people can be safe. And, people want to be 100% safe. They don't want to be a little bit safe, or we'll try our best. People want to know that this is the county I live in, be it Eureka, White Pine, this is the county I'm in. This is the county I want to be able to stay in and raise my family and not have to worry about moving because, the water is undrinkable.
Danielle, can I just jump in here?
Yeah.
For a couple questions, one for Laura, one for Jim. It was mentioned earlier, I'm surprised it took this long to talk about this federal money that's coming Nevada's way. $4 billion, maybe $3 billion of that to the state, and the rest to the local governments. Isn't it hard to make the case that anyone should be taxed, not only during the economic devastation that the pandemic has wrought, but now with this money that is coming? It's much more difficult, isn't it, to make the case that, forget about mining, don't forget about mining, but put mining aside for a second in this discussion. How do you advocate for tax increases when the state is about to get $4 billion?
Is that for me?
Yes.
I would say easy because this $4 billion is a backfill. Essentially, it's having to make up for a lot of additional expenses that our school districts, that our municipal governments, county governments have had to pay. And we're not going to get $4 billion every year. This is a one-time thing. And I think, the hard rock mining industry provides longevity and provides somewhat sustainability and expectations for the states going forward and building out our budget. So, elections do matter. Thank God we elected Joe Biden. And I think it's kind of corny to say help is on the way, but help is on the way. And I know that our counties were really hurting, and our local elected officials have been working around the clock. And so hopefully this money can be put to good use, but I don't think anyone is thinking this is something that's going to be, the money's going to last 10 years.
Let me, Dan, just ask Jim a quick question.
Yeah.
I'll let you back in. And we're gonna try to wrap this up within the next 10 minutes or so, if we can, I think. Jim, you said very bluntly that mining can pay more. How much?
I have certainly, I can spend anybody's money except my own. But I think that's the whole point of this exercise, is mining is not part of this discussion tonight. And I'm understanding that they are in discussion with leadership. I think that is what has to happen. And as I'm not going to pin this on anybody, I'll just say it again. There's got to be balance in this process so the state becomes more sustainable, that we can improve those systems that got cut and make this a place that everybody can live and raise their children. So I can't give you a hard number, John, but if I can stand on a principle, it is that happens with communication, and it has to be open communication, not surprise, and not at 4 o'clock in the morning.
Daniel?
I just mentioned something about the stimulus money. Go back to my role of historian. This is one we should all remember. In 2009, when we had a very difficult, similar budgetary session, we had, I believe, was the ARRA, American Reinvestment and Recovery Act, pumped a lot of money back into Nevada. The remarkable work done by the Fiscal Analysis Division of the Legislative Counsel Bureau, I'll never miss a chance to plug LCD, balanced the budget and managed to limit the amount of the cuts in the budget that were proposed by Governor Gibbons during that session, limited just to the ones he proposed pretty much. But they put that money wherever they could. And one example is a lot of the money was eligible for use in the higher education area. In 2011, when the university system came back, they ended up with a general fund shortfall because a lot of their general fund money had been backfilled with ERA money in the prior session. So I agree with Laura, you have to watch this for a long-term solution. This is to get us through the 2021 session, and we need to look to more stable policies for the future.
So, I guess as we're sort of wrapping up here, and anyone can feel free to chime in, but the process of these resolutions is that they then, if they're approved in this session, one or more, they'll go to the ballot. And, I'm curious, Lauren, if you have any thoughts on sort of how this process has played out in the past when there's this sort of dynamic between the legislature and then, a vote on the ballot. How does that affect the debate and sort of the politics around this issue?
Well, I think they're connected. You can't have any of these three resolutions going to a vote of the people, I think, without some sort of legislation accompanying them contingent upon passage of the constitutional amendment. And that's assuming the legislature processes one or more of these resolutions. In '89, Senate Bill 61 was a necessary implementation device for SGR 22. The legislature chose to put that to a vote of the people during the session because it was part of the governor's budget, it was needed immediately. Whatever the legislature decides to go forward with, there should, whether it's connected to one of these three resolutions or not, there's going to need to be legislation. There's going to need to be a bill either to carry out the legislature's side of one of these resolutions or something in lieu of the solutions proposed in the constitutional amendments.
And that would be in this session, you're saying?
I believe so. Yeah, we got what 70 days left, 78. No, I'm not in session. I don't keep counting anymore.
John does that instead.
86.
Well, I am curious, like, we've talked about different in the past. Governor Miller was very involved in this, mentioned his state of the state, was very involved in the session, and that's varied throughout this time. And I know there's also the dynamic of having it on the ballot during an election where, other politicians are on the ballot. I'm curious, Lauren, what have you seen from governors in the past? Have they been involved in this? I know it's something that the legislature is more in, and what do the laws say about that?
Well, there haven't been a large number of constitutional amendments in this area, and I think it's varied from administration to administration. Certainly our last major tax increase was in the 2015 session, and it was Governor Sandoval played a huge role in getting that through. Doesn't necessarily involve going to the election. Our ballot in 2022 is going to be an extremely interesting, extremely crowded one, and a lot of issues bringing people to the polls from one side or another. I think it varies with the character of the governor, and varies with the issues that are raised from session to session.
Mm-hmm.
Daniel, if I can just wrap things up unless you have anything else. I just want, Jim, is there, I made a joke about the olive branch that Daniel mentioned at the beginning. Is there one of these resolutions that you could stomach more than the rest?
I'm sorry, were you asking me?
I was.
Well, fortunately, they have no impact on me. So, but I think that was not the question you were asking. And
But
again, I can't answer.
you are here as a lobbyist for mining, so you know what I meant.
Okay, I can't, but I think the answer to that question is the alternative that Lauren is talking about seems to me to make the most sense, because those three resolutions came out of a crucible of that special session, and I'll leave the characterization you gave to it. I think policy can be made. As difficult as the legislative process is, they can make policy, but it takes some balance, and it takes some thought, and it takes input from everybody. And I don't begrudge anybody having their input, but it has to be thoughtful. So my guess is the best outcome is a fourth measure that comes out of the legislative process.
So Laura, let me address the last question to you, unless Daniel has anything after this. But we've talked a lot about 1989 before either you or Daniel were born, I think, but we haven't talked about 2013 when another measure was put on the ballot, and it narrowly failed, but it won in one county and lost in the other 16, if I remember correctly. But it won in Clark County by almost 10 points. There is an imbalance politically in this state, Laura, in the sense that down here in Clark County, there would be support for mining, and that's part of the reason they're doing the ad campaign now, obviously, because most people in Clark County, or a majority of people in Clark County, would like to see mining taxed. This is a real problem, I think, in terms of public policy and in terms of the way business is done up at the legislature. So how do you deal with that split?
Yeah, I mean, that was a heartbreaker because, I mean, that was a terrible year. It's, a year we lost Congressman Horsford and Speaker Frierson. It was just a bad year. And despite that, the resolution was very, very popular. So it shows there was a lot of ballot splitting and crossover too. And so I think that is a good sign for all three of these ballot initiatives. But I always think it's interesting when people say, it's just Clark County that wants to raise these taxes. Sure, but it's the benefit of just the rural counties that of just keeping mining so powerful to protect these profits, and kind of ignoring that, most of our state lives in Clark County. And I know that, there's pressure put on some of our legislators in the South. It'd be interesting to see, who is behind defeating some of our assembly members in the northwest corner of Clark County, to see, kind of the price people have to pay for trying to step up. And I do not think it has to be that way, because it doesn't make my life any better if someone in Eureka County is struggling. And I don't think it makes someone's life better in White Pine County if someone in Washoe is struggling. We're all the same state. We shouldn't have to split up and be North versus South. This is something we never talk about. It's a lot of attacks that get put on us, but there's plenty still all over the state. We don't do it anymore because of the pandemic, but we do make a lot of trips out to the rural parts of the county to talk with, ranchers, farmers, and everybody in between. And so, we can't pretend that one piece of the state can suffer, the other piece of the state is fine, and that's how it has to be. It doesn't have to be that way.
So I just want to say that this is, Jim, did you want to say one thing?
I'll
Briefly?
try to be as brief as I can, John, if you don't mind. I think the point that you're raising is the value of ballot questions. And one of the difficulties, and I prefer the legislative process because there is at least an opportunity for open debate and evolution of that debate.
Is that really the reason you prefer the legislative process, Jim, or have you seen the results of the polls?
Well, it's kept me employed for quite a while, but I think the answer is the ballot questions. Some are popular and some aren't. And the problem, I think, actually, Laura, I think just raised it, is that these kinds of decisions, you might think, well, I live in Clark County and I don't even know there is anything north of Indian Springs, and I've never heard of mining, so why not tax them, without realizing that the economic aspect of what happens in the state is always going to be paid for by Clark County. And so if we damage part of the economy, Clark County will have to step up more. So there's always a reverse effect of this stuff. And so I appreciate what she said, that we don't want to harm the rural counties. We want to keep them whole because they're exporting taxes. And if they stop, Clark County will have to export more. So it all comes back to a statewide and a single Nevada view.
Well, this has been a very robust discussion with three very smart people, and we can only hope that whatever happens in the legislature is going to be as robust as this, and I hope it really is aired out all sides. I do want to thank Jim Wadhams and Laura Martin, and especially Lauren Malkowicz, who came in from the beach, took off his flip-flops, and actually participated in this. You've all been great. Daniel, thanks for doing such a great job of moderating this panel. And I want to thank everybody who took the time, 90 minutes out of their night to watch this. I hope everybody learned something. I hope if you appreciate this kind of discussion that you'll go on the Indy website and donate to our nonprofit enterprise. We're not like a mining company. We're a for-profit. We're not a for-profit endeavor, and we need help from the kindness of strangers. So thanks to everybody for coming tonight and watching, and thanks to everybody on the panel once again, and have a great evening.